Welcome to our presentation on Bajaj Finance Limited, a prominent player in the financial services sector. Let's dive into the world of Bajaj Finance and explore its journey, achievements, and corporate actions. Bajaj Finance is the largest non-banking financial company in India, which is headquartered in Pune. It is a subsidiary of Bajaj Finserv Limited and is engaged in the business of lending. Bajaj Finance was founded by Rahul Bajaj and is continuously guided by visionary leaders including Sanjeev Bajaj and Rajiv Jain. Initially established in 1987 as Bajaj Auto Finance Limited, the company primarily focused on two and three-wheeler finance. Over time, it expanded its horizon into various sectors like offering lending, mutual funds, and fixed deposits. Bajaj Finance's influence is exemplified by its inclusion in both the BSE Sensex and Nifty 50 indices. It shows its importance in the Indian stock markets and its impact on the broader economy. From consumer lending to SME lending, rural lending, commercial lending, deposits and wealth management, Bajaj Finance Limited covers a wide spectrum of financial services. The company has established a vast network of 294 consumer branches, 497 rural locations, over 33,000 distribution points, and more than 150,000 stores. Bajaj Finance has continuously evolved its strategy to adapt to changing market dynamics. With strategic plans to launch new products such as auto loans, microfinance, and tractor financing, Bajaj Finance further aims to diversify its portfolio and expand its market. As of 29th August 2003, the current share value of Bajaj Finance stands tall at 7,295 rupees, which shows us how the market looks into Bajaj Finance growth and performance potential. As we delve deeper into this presentation, my friends will further explain you the fundamental and technical analysis and what are the impacts of the corporate actions.
Bajaj Finance, a major player in the financial sector, exhibits an ownership pattern that reflects a diverse stakeholder landscape. As of June 2023, promoters hold a significant 55.87% of shares, indicating a strong foundation led by the company's founders. In addition, domestic institutional investors contribute 16.31% and foreign institutional investors hold 16.68% public, and other stakeholders hold 10.99% and 0.15% respectively. Bajaj Finance market capitalization stands tall at 4,41,917 crores. Bajaj Finance exhibits a face value of rupees 2 per share and a robust book value per share of rupees 897.35. The current price earning ratio stands at 38.09. In terms of financial performance, Bajaj Finance journey is impressive. In financial year 2023, it achieved a remarkable 62% rise in profit after tax, fueled by a substantial 30% increase in net interest income. Bajaj Finance is one of the top 35% companies with good fundamentals. Moving forward, we'll explore the world of technical analysis.
Transitioning from fundamental to technical analysis. Now let's go into technical indicators of Bajaj Finance Limited. Our main aim is to gain insights of recent and latest performance and also the potential trends. As of 29th August, Bajaj Finance current price is above 8 out of 8 SMA, that is known as simple moving average, and above 8 out of 8 EMA, that is exponential moving average. These are the SMAs and EMAs. Now let's look into some technical indicators. Relative Strength Index. It is also known as RSI, and its readings are 57.2, which indicates neutral sentiment, and CCI Commodity Channel Index, which is of 135.5 ranking readings and which shows bullish sentiment, and MACD Moving Average Convergence Divergence. Its readings are minus 26.9, which shows the bearish sentiment. MACD is positive, it shows the bullish sentiment. MACD is negative, it shows the bearish sentiment. We could also see the other technical indicators like pivot movement. It's nothing but to determine overall trends which are going in the market. So Bajaj Finance Limited is trading above its pivot point. So let's look into some volume analysis of Bajaj Finance Limited. Today's National Stock Exchange plus Bombay Stock Exchange traded volume is 14 lakhs with a combined delivery volume of 4 lakhs. Yesterday's traded volume was 7 lakhs with a combined delivery volume of 3 lakhs. The 1 week average traded volume is 11 lakhs with combined delivery volume at 5 lakhs. And the 1 month average traded volume is 9 lakhs with combined delivery volume at 4 lakhs. Technical analysis offers valuable insights in Bajaj Finance Limited and also with recent trends and potential trends.
Corporate actions. A corporate action is an event initiated by a public company that brings an actual change to the securities issued by the company. Corporate actions are actions taken by the company that could directly impact the shareholders' value. These may be monetary or non-monetary. These actions are generally approved by the company's board of directors. There are many corporate actions announced by a company. Some of the main corporate actions are dividend payout, bonus issue, stock splits, rights issue, and buyback. In corporate actions, there are several key dates that plays a crucial role. Here are some of the key dates.
Announcement date. This is the date on which the company officially announces the corporate action to the public. It provides shareholders and investors with initial information about the upcoming event. Record date. The record date is the date on which the company examines its current list of shareholders to determine who will receive the benefits of the corporate action. For example, only those who are registered as shareholders in the company's books as of the record date will be entitled to receive dividends or participate in a rights issue. Ex-date. The ex-date is the date on which a stock starts trading without the benefit of corporate action. Payment date. This is the date on which the company actually distributes the benefits of the corporate action, such as dividends or bonus shares, to the eligible shareholders. Note: the ex-date and the record date for all the corporate actions are on the same day.
Dividend payouts. Dividend payouts are the portions of the profit made by the company, which are distributed to the company shareholders as a reward to their investment. Dividends are paid on a per share basis. Dividends can be categorized as either final or interim dividends. An interim dividend is a dividend that is paid before the company financially ends, while a final dividend is a dividend that is paid after the company final year end. Interim dividends are usually smaller in amounts than spends. Let's delve into the company dividends history and explore the key details of the dividend distributions. For the final financial year ending in March 2023, the Bajaj Finance declared an equity dividend of 1500% amounting to the 30 rupees per share with the current price of 7,293.35 pies. This is translates to the dividend yield of 0.41%, showcasing the company commitment to the returning value of the shareholders. The company has a good dividend track record and has continuously declared dividends for the last 5 years. The ex-date and short for the ex-dividend dates. It is a crucial date in dividend payouts. It's the date on or before which a stock trade without its dividend. If an investor purchases the stock on or before a ex-date, they are not eligible for upcoming dividend payout. Bajaj Finance consistent and generous dividend payouts reflects its strong financial performance and its commitment to enhancing shareholders' value. The company able to provide steady returns to the shareholders.
A bonus issue is a stock dividend allotted by the company to reward its shareholders. In regular dividends, cash is being paid out to the shareholders, but in a bonus issue, stocks are paid out instead of cash. The most recent bonus announcement by Bajaj Finance dates back to 2016 when the company declared a bonus issue in the ratio of 1:1. This implies that the shareholders received one additional share for every share they held. This bonus issue was a demonstration of the company's strategy to enhance shareholder value and encourage greater participation. When the bonus shares are issued, the number of shares the shareholder holds will increase, but the investment value remains the same before and after the bonus issue. Companies issue bonus shares to encourage retail participation, especially when the company's price per share is very high and it becomes tough for the new investors to buy shares. By issuing bonus shares, Bajaj Finance aims to make its shares more accessible to a wider range of investors and to reward its existing shareholders for their continued support. This bonus issuance further strengthened the company's position in the market and highlighted its commitment to shareholder growth.
Stock splits. A stock split is a corporate action in which a company issues additional shares to shareholders, increasing the total value by the specified split ratio based on the shares they held previously. When a company declares a stock split, the number of shares of that company increases, but the market cap remains the same. As the number of shares increases, price per share goes down. Stock split is done to infuse liquidity and to make shares affordable for various investors who could not buy the shares of that company before due to high prices. In 2016, Bajaj Finance conducted a stock split to make its shares more accessible to a wider range of investors. The company reduced the face value of its shares from Rs 10 to Rs 2. This means that for every share with the old face value of Rs 10, shareholders received 5 new shares, each with a face value of Rs 2. The announcement of this split was made on July 26, 2016. The old face value of the share was Rs 10 and the new face value became Rs 2 after the split. The ex-split date, which marks the day when the share started trading at the new face value, was September 8, 2016.
Hello everyone, as my friend has already introduced previously in the video about stock splits, I'll be telling about right issues, merger and acquisition, peers and competitors, and buyback shares. So I'll be starting with right issues. Right issues are nothing but the rights which are issued by the company in accordance with the board of directors, which will be telling the shareholders to that what the new additional shares they are entitled to buy at the particular amount of shares they are being holding into the company. What will this basically do? This will benefit the company will helping the company to get new funds, which would be applied in expansions on any other benefits with the particularly the company share, or it will also benefit the shareholders with a new percentage of them in the company, basically increasing their ownership. So talking about Bajaj Finance, as we all have been studying through this video, this company took 2 right issues, one in 2013 and one in 2006. The one it took in 2013 was made on announcement date of 15th of January 2013 with a record date of 25th of January 2013, which went into trading with an ex-right date on 23rd of January 2013 with a ratio of 3:19. So basically what does this suggest? A shareholder which are being holding up 19 shares in the company are entitled to buy 3 more new shares. This will increase their shareholder ownership, which was at the face value of 10 rupees and a premium value of 1090 rupees. This whole money will be accounted for a particular share value. The second right issue, which was being took by the company, was in 2006 with an announcement date of 12th January 2006 and a record date of 20th November 2006, but went live into trading on an ex-right issue date on 13th of November 2006 with a ratio of 6:10. Same as previously, this would also account like every 10 shares the shareholder is being held into the company, they are entitled to buy 6 more new shares with a face value of Rs 10, same as that one, and but at less premium value as the company was in this early stage of 315 rupees. And as of now, Bajaj Finance has took only these 2 right issues. So I'll be telling you about buyback shares. Buyback shares are nothing but the shares of the company which are being diluted into the market. The company buys them back. What this would do? This would benefit the company and it would increase the company's capital percentage in the market basically in the share market, it will increase the capital income, and it will also benefit to its shareholders sometimes. It will result in increasing ownership or many other factors, but basically it benefits companies every time, not shareholders most of the time. And now I'll be telling you about merger and acquisition. Merger is nothing but when two companies, basically when they are in loss. For example, we can take one in financial loss, one in technical loss. They both combine together. Basically, sectors can be any. I'll just take this for example. So they both combine together and tell the shareholders that we are coming in the market as third new entity, and now we'll be benefiting our shareholders. And as of now, Bajaj Finance hasn't took any buyback shares in the market till now. Buyback shares I already told about in the previous video. Sorry, any merger and acquisition hasn't been happened till now. You all must be wondering how Bajaj Finance has flourished this now in the market. Because of a good decision it took at the right time, and peers and competitors, Bajaj Finance is not the only company which is there in the market. It has its competitors, which are basically be named as Muthoot Finance, Shriram Finance, Reliance Jio Finance, Mahindra and Mahindra Finance. These all are basically flourishing in the market, but Bajaj Finance is being flourishing in the market from its early stages to till now because of good actions it undertook. Thank you.
In conclusion, Bajaj Finance stands as a powerhouse in the financial services sector, poised to its remarkable journey of growth and innovation. Its consistent performance in financial sector, strategic corporate actions, and commitment in rewarding its shareholders highlights its aim in creating value. Thank you for exploring the world of Bajaj Finance with us. Thank you.